Hey guys, welcome to another episode of Tax Law Guy. I am tax attorney Joshua Sells from JM Sells Law, and today we have the Tax Law Guy 7 reasons why returns get flagged for audit report. So we're going to be talking about that today. 7 reasons why your tax return will get flagged by the IRS for an audit. So let's go ahead and get into today's episode. All right, so 7 reasons why your tax return will get audited, or at least flagged for audit, by the IRS. Of course, we know that not every tax return gets audited by the IRS. In fact, only 1 out of 400 tax returns will be selected this year for an audit by the IRS. So what are the red flags that will trigger an audit by the IRS? Well, we have our report here. We've been working hard on this. And so let's go ahead and talk about reason number 1. Reason number 1, according to our report, for reasons why the IRS will flag your return for an audit is simply numerical mistakes. That's right. We still have people today who will do their tax return by hand. We actually have some clients that work with our firm, and they have historically done their tax returns by hand. Numerical mistakes can and do happen when you do your tax return by hand. That's a huge red flag for the IRS. Simple math on the return, when it doesn't add up, literally, will flag the IRS, and it could force your return into an audit or exam to find out what the return was supposed to say. So what do we recommend? Here at Tax Law Guy at JM Sells Law, we recommend that you use software for your tax returns. There's no need to bring out the old calculator to do your 1040 by hand. Those days have long since gone away. So make sure that you are relying on technology to do the simple math for you. It is, believe it or not, still much more accurate than doing it by hand. So numerical mistakes, reason number 1. Number 2, the number 2 reason on our report why returns get flagged for an audit is an issue with the self-employment deduction. So if you are self-employed, you've already increased the likelihood that you'll be flagged for an audit, but with those deductions on your Schedule C for your self-employment, those numbers are all very even, so they all end in zeros. For example, you estimate and you put utilities for $2,000, you put supplies for $5,000, you put your mileage for 12,000 miles and do the calculation for that. When your self-employment deductions are perfectly even numbers, namely ending in zeros, that's a huge red flag for the IRS, and you can almost guarantee that your return is going to face a higher probability of being subjected to an audit. So reason number 1 why you may increase the likelihood of an audit, numerical mistakes. Reason number 2, issues with your self-employment deductions on your return, namely they all end in zero. Reason number 3 why your return will be red flagged for an audit is lack of paperwork. So if you have a requirement to submit, for example, an attachment with the return, you think of S Corporation owners, the 7203, the basis schedule, and you don't submit that required paperwork with the return, that certainly is going to increase the likelihood of an audit. It's going to force your return to face an inquiry from the IRS about where the required paperwork or attachment is. So if your return requires an attachment, make sure that it is included. Don't exclude it and submit the return hoping nothing happens. Definitely don't do that, because you've now increased the likelihood of an IRS audit. So we said number 1, numerical mistakes. Number 2, your self-employment deductions just don't make sense. They all end in zero. Number 3, you fail to include the required paperwork. Number 4 on our report, so we've talked about the self-employment deductions, but number 4, abnormal deductions. Abnormal deductions. So for example, if you are self-employed and you have, for example, we'll say a dog grooming business, right? We have several of our clients who have a dog grooming business. They're self-employed, but you have, for example, 50,000 miles for your mileage deduction. Well, unless you're a traveling dog groomer, that may be a little bit abnormal, and so that's going to red flag the IRS. Keep in mind on that Schedule C, you have to use the proper code for what industry your self-employment, your business is in, and the IRS uses that information to establish benchmarks for what is normal for business deductions for your self-employment. So make sure that code is right, first of all. Second of all, make sure that those business deductions are reasonable for your industry. We certainly wouldn't expect a lot of cost of goods sold in a service business, right? And so if it doesn't make sense, it may raise a red flag to the IRS for an audit. So we said numerical mistakes, self-employment deduction issues. We said not submitting the required paperwork or attachments. We said abnormal deductions for your industry. And the fifth reason, number 5, on our 7 reasons why your return would get flagged for an IRS audit. Number 5, uncommon income levels. Uncommon income levels. Namely, if your historic returns were at a certain income level, and then in a year it just jumps up astronomically, whether it's from self-employment or maybe it was capital gains, that giant jump in income, those uncommon income levels, may increase the likelihood that you will face an IRS audit. If it's the correct income, then there's nothing wrong with reporting it, but you may want to really focus on, especially if it's self-employment income, make sure that your return is accurate. If you have a self-employment, sole proprietorship, a Schedule C, and your gross receipts, for example, doubles, triples, quadruples, if that's not accurate, you may want to go back and double check that because those abnormal income increases could subject you to an IRS audit. So number 1, we said that there are numerical mistakes. Number 2, abnormal self-employment deductions. Number 3, lack of paperwork. We said number 4, excessive deductions that aren't typical for your industry. Number 5, uncommon income levels. Number 6, undeclared income. If income was reported on your Social Security or EIN, whether that was through a W-2, a 1099 of some sort, you have to make sure that that is reported. That's almost an automatic audit. We call those unreported income exams. The IRS knows the income that was reported to it. If it doesn't match the return, then they will likely send you an informal notice, the underreported notice, underreported income notice, which is a type of audit. That could also lead to a full-blown audit of your return. What do we recommend here at Tax Law Guy? File the extension, make sure that you pay any tax that you think you're going to owe, and then pull your wage and income transcripts from the IRS. Huge trick here, huge tip and trick. When you have the income that's reported to the IRS through a 1099 or a W-2, you can actually access that to see what income was reported under your social. However, that only becomes available after the tax filing deadline. The IRS does that on purpose. So what you do, you file that extension, make sure you're not going to have a balance due, you pay it, and then pull your wage and income transcript for the year to verify that all of that income was reported. Number 7 on our list of the top 7 reasons why your return will be red flagged for an audit: large charitable contribution deductions. Hey, it's okay, and you should donate to a nonprofit, a charitable organization. Take those deductions, but excessive deductions certainly will red flag your return for an IRS audit on those Schedule A itemized deductions. So if you do have a large charitable deduction, Make sure you have a contemporaneous statement. That's just an end of the year statement from the organization. Make sure that you get that in January of the year. Make sure it lists the donation amount or the sum of the donations amounts, and make sure it has a statement on the bottom of it that says you did not get anything in return for that contribution. Absent that statement, the charitable deduction would not be allowed if you were audited. And you cannot go back retroactively to get that statement, so make sure you have it when you file your return. All right, there you have it. The 7 reasons why your return may be red flagged for an audit this tax season. Hey, thanks for watching our latest episode of Tax Law Guy. We'll see you next time, and we'll be discussing IRS penalties on our next episode. All right, thanks for watching.